Most consumer credit analysts focus on the financial side of retail: spreads, delinquencies, charge-offs, and recovery rates. But there's an operational layer underneath that rarely gets discussed: inventory and inventory management. Someone has to move those goods, and how efficiently they get moved determines a lot. Recovery values in bankruptcy, margin protection for healthy brands, even how retail signal where they're headed next. My guest has been operating in that space for 17 years. Alex Hennick is the founder of AD Hennick Associates, a Toronto-based firm that operates globally across the inventory business, from bankruptcy liquidations to excess inventory for healthy brands. We cover three things today. First, how retail inventory liquidation works, anchored by how Alex's team cleared a 50,000 square foot Toronto barbecue store in a single week. Second, the quieter but larger business of inventory management for going concerns, brand protection, channel restrictions, and why some manufacturers would rather destroy product than sell it into the wrong market. And third, what Alex is seeing on the ground right now: tariffs, consumers trading down, and the structural decline of mall retail. This is a side of the ecosystem you rarely hear from directly. Plenty of ground to cover, so let's get into it. Okay, Alex Hennick, welcome to the Consumer Credit Matters podcast. How you doing?
Will, thank you so much for having me. Definitely a big fan of your podcast, and it's really great to be here. So a bit about me. I started AD Hennick Associates 17 years ago, and primarily what we're up to is we are purchasing larger quantities of inventory. So this could be day to day, could be brands and companies who have excess inventory, whether that be canceled orders, discontinued products, repackaging changes, or even close dated products that, might be coming up close to expiry. And additional to that, we're purchasing distressed assets. So when a company goes bankrupt, we will make a bid to purchase the remaining assets. That could be equipment or machinery or, forklifts, racking, manufacturing equipment, and as well purchasing larger volumes of inventory that, may be remaining from these assets.
And you're based in, I believe you're based in Toronto, right? Or in Canada.
Yeah, we're in Toronto, Canada.
But your company is global. And so you deal with global names, global companies, and help them manage their inventory or liquidate their inventory, whichever the case may be.
Yes, that's correct. So whether we're shipping something to Europe by container, or we're purchasing something out of the U.S., or in our backyard here in Canada, we are kind of buying and selling everywhere.
So let's dig a little deeper into kind of what your company does, just to make the business model a little more salient. Let's take liquidation, and we'll take inventory management second. What is going on behind the scenes to help manage that liquidation process, and why is what your company, what value add is your company providing, or companies like yours providing?
Yeah. So we are typically working, behind the scenes with the trustee in bankruptcy or the bank. Could be special loans, could be a third-party warehouse. But when you're dealing with distressed assets, we're building those relationships so that when the opportunity comes up, we get an opportunity to bid. So, if it is a retailer and the best method to sell the remaining assets or remaining inventory is to do it at a store level, we'll put together a proposal and make a bid to either purchase the assets or potentially work on behalf of the bank and trustee to sell the assets in the most efficient manner. So, we're putting together a proposal, we're coming together with the game plan, and it might be to clear out the stores, it might be to run a sale in store. If it's a manufacturing facility, we're going to run an auction on site where we're going to sell all the equipment and machinery exactly where it is, because the cost to move it, typically is not worth it. But everything's very time sensitive, because if it's a retailer, you're still in leases. So you're still paying your lease, to be in the facility. If you have a warehouse, you might, still be paying, for a period of time. But no, we're making a different game plan depending on the deal, and utilizing our relationships just so we get the opportunity to be able to put our best foot forward and make a bid.
And so this is an auction process. Are you in a position to name names around a historical or a past liquidation that you helped out with, that we can kind of anchor the idea of what you went through?
Yeah, I mean, there's a number of, ones we've done, here in Canada, even just to give an example. Recently we did a company. It was called the world's largest barbecue store. And it was based in Toronto, Canada, which to me, that's your first problem. Here we have a, 5 or 6 month barbecue season, unless, there are some people who go, 12 months a year, but they had a 50,000 square foot barbecue store.
Wow.
And it was here in Toronto. The cost of rent was substantial. And the amount of barbecues and pizza ovens and accessories and fireplaces you need to sell, especially in the months of November, December, in the middle of the winter when people are not, looking for these items.
Right.
So we came in and there was maybe, 5 or 6 or 7 days left in the month. And we were able to quickly turn around and make an offer to purchase every single thing in the building and clear it before the end of the month. So therefore they didn't have to pay another month's rent. And I basically sent in a team, to sleep there for the week. And we packed up every single thing from the racking and the forklifts to all the barbecues, all the accessories, all the front office, computers and boardroom. And we wanted to, clear the whole place and hand the keys back empty, which is exactly what they were looking for in the situation. So, as opposed to selling it on site, because financially it wouldn't make sense, we purchased it, we brought it into our warehouse, and we ran an auction in one day out of our warehouse, selling, a couple $1 million worth of, barbecues and accessories in one day right before, I guess what we would call barbecue season. I believe it was like the first or second week of April when we did it, not this year. But the timing was right because a lot of people are, looking kind of in April and May to start, buying stuff for the summer. And it was a very unique situation, but we had to act quickly. We had to, be creative, but thankfully we were able to execute.
So if I come over to your house, am I going to see like 10 or 12 grills in your backyard, or you were able to right size the inventory level?
That's sometimes the most difficult. So, you always, it's like you always want to be able to, get what you can, because if you ever do want these items, you never want to pay full, retail. But you can't overdo it because you can only have so many things. But no, I definitely got a lot of great stuff and a lot of, great accessories and things you would probably never need, that you would just, because we had it and that, the time and the price was right. But yeah.
So, so in this case, if you have the warehouse capacity to provide certainty around the end game, in this case, a liquidation.
So yeah, we came in, we got the opportunity. Thankfully, they accepted our bid. And this one, I think, close probably around 15 truckloads of inventory
Mhm.
that we need to pack it up, pack it up the right way, organize it so on the other end we know what we're getting.
And then I think importantly, the other dimension of this is now you've got the carrying cost, right? I know you've got a warehouse probably at the ready for these situations, but you are carrying this inventory, so you don't want to hold on to it. It's also, it's just aging. So you have the ability to put this on some kind of auction on the web, I presume, and then you're kind of in the position of a retailer at that point, and you're liquidating it yourself. But importantly, you've taken on that risk, and you've removed that risk from the company that's in trouble.
Yeah, you said it. So yeah, so no, we're able to, turn it around quickly. We take on the risk, but we're in the barbecue business, but it's
Right.
very short term. And we
Right.
want to sell it all as quickly as possible. So a lot of situations we'll wholesale. We'll sell to the largest retailers, the largest discount retailers, potential barbecue stores, especially that time of year. The best way for recovery in this situation, based on having the warehouse set up, based on having the ability to set up an auction, based on having a massive following, 70, 80,000 people that we could email when we have upcoming auctions, we knew that the recovery would be substantially higher selling it that way versus trying to sell it to a retailer. There was also a lot of odds, there wasn't that massive of quantity per SKU or per barbecue or per item. So it makes it more difficult to sell on a wholesale level. So yeah, so for us, it made sense to do it that way where we brought it in. We spent the next few weeks setting up and advertising to do an auction. to the public one day. We sold every single item in one day to the
How do
end user.
people find you? Like, how do they know where to even look, or that a sale is coming up?
Yeah.
And
So
particularly could be anything on any given day. It's
what
just
exactly, every day is kind of a new adventure. We've been able to build a great customer base. We do have, probably almost 80,000 person email list of people that we could email directly when we have a big sale, when we have an auction. Additional to that, we advertise. We go to where we think the customer will be. If we're trying to reach customers, that might be through social media, that might be through, a Facebook or Instagram campaign. If it's more, business oriented, maybe that could be through LinkedIn, but we're putting dollars behind it. We're getting the word out. And people know. I mean, when we're getting stuff in, we're getting brand name barbecues. We're getting brand name. We have a big auction coming up next week, and it's all water sports items. We bought a
interesting.
massive quantity of paddle boards and kayaks and these water bikes, which are a high end bike that's on a paddle board. We have e-bikes, and we have electric ride-on cars for kids. Just stuff we're buying. We're going to companies, whether it's distressed or not. We're purchasing it in volume and knowing what we could sell it for kind of on an auction level. And every time we have these auctions, it snowballs because someone sends it to their friend. They send it to their, father-in-law or their friend, their cousin or their employee, and people are seeing it, and the customer base is growing. They're getting deals, and it's allowing us to really move the volume and get the right recovery.
So let's talk. So that was a liquidation example of a company that was going under. You're maximizing certainty and return on the remaining value of a company that's going under for good. Okay. I thought what was actually even more interesting than that is the inventory management. So now you're dealing with going concerns. These companies are doing just fine, but maybe they made I don't know, an over ambitious inventory purchase at the beginning of a, I don't know, the summer season or the winter season, depending on whatever business they're in. And now they find that they're left with too much inventory on hand, and they need to clear the warehouse or the store to make room for the next season's inventory. And again, if you can come up with a salient example of this type of retailer or situation, that would be, I think, instructive.
Yeah, for sure. So day to day, we're working with a lot of companies that are successful. They're moving a lot of volume, but they have excess inventory. Challenges come up. Perfect examples are, could be last year's model where you have something newer, latest, greatest type of thing. There are a lot of canceled orders. Maybe one of their customers or one of their retailers went bankrupt or can't order as much, or something happened on their end. They might be stuck. And another common one I would say is definitely when items become closer dated. This could be chocolate. This could be sunscreen. We purchase massive volumes of sunscreen from manufacturers that might have a date where in April they offer us, say, 150,000 bottles of sunscreen with a November expiry. But if we get it in April and sell it to some of these retailers, especially, being seasonal here in May, they could sell the sunscreen in June or July, and the sunscreen will be used over the course of the summer. So
Right.
that short date, we can make it work. Whereas your typical retailers, might need 2 years, and there's certain requirements and restrictions. So a lot of people can't even purchase that inventory because, say, there might be only, 6 or 8 months left. But for us, at the right price, we'll purchase any volume. We'll move it into the right avenues. But the key for us, the number one most important thing, is brand restrictions. So the first thing is where do you not want your product sold? Like, this isn't dealing with the bank. This isn't dealing with the creditors. This is dealing with a successful manufacturer who might be sitting on excess inventory, or maybe they ordered wrong, or like you said, it's seasonal. How do we protect your brand? Where do you not want it sold? Do you want it out of the country? Do you want to avoid these 8 retailers? Do you not want it online? So we work very closely with these brands to make sure to protect the brand and make sure the product is sold, into the right channels. For a lot of these brands, the price sensitivity and making sure they hold their value is more important. They might even rather dispose of the inventory, even though it's going to bring in money, because the value of their brand or the value of the retail price or the value of the product sits at a certain point and they don't want to affect that. So in a lot of cases, it's just crucial. And also, they also don't want this inventory that might be a deal offered to their regular customers because they want to focus on selling the latest, greatest, the newest sunscreen that has 2 years expiry, as opposed to selling this at a huge discount because then they're not going to buy the other stuff at full pop kind of thing. So it's very important that we're aligned, working closely with the brand, working closely with the manufacturer to figure out, if there are restrictions, what are those restrictions, and being an open book, because it's very easy to figure out where the product's going to end up, and we want to make sure that where we're going to end up selling it, eventually it's going to be somewhere where it's authorized and allowed, because that'll also impact how much we could pay for it.
Right.
If a brand says you can't, you sell it wherever you want, sell it online, sell it anywhere. Most likely I could offer them more than if they say you can't sell it online, you can't sell it to these 8 retailers, like keep it in the country. You can, or it might be packaging. Certain languages might be affecting the deal where it has English, Spanish, and maybe because of that, I can't send it to Europe or I can't bring it to Canada. Not to say we can't buy it. It just might limit as to who we can sell it to now based on, certain packaging. It could be related to Health Canada and even getting it in the country or vice versa. So there's a lot of, things that we kind of, have to factor there.
Right. Yeah, that in other words, it can get complicated very quickly, and I imagine that being global helps also give you more options. Do you generally step in the contractual shoes of the retailer, or do you set out with a new contract with the supplier, or just high level? What is the legal landscape like when you're trying to, let's just stick with the redeploying inventory rather than the liquidation? Yeah.
No, for sure. I mean, typically what I'll do is, if legal documents are required, we're happy to sign. A lot of the time we need to sign an NDA, even just to get access, to the inventory. But I think it's just making sure to build that relationship the right way and figuring out what the challenges are on their end and figuring out where the best places are to sell them. Because, for us, we look at it as a partnership, and whether a company comes to us, once a year, quarterly, every 3 years, whenever they have a challenge, we know that after they work with us once, they're always going to come back because we pay them up front, we pick it up from their warehouse, we abide by restrictions, and we do what we say we're going to do, but we build that relationship so people, like us and really want to work with us. So,
and trust you. Yeah.
Which is everything. With their brand, the trust is crucial. Sometimes after the fact, if a company goes bankrupt, they want to recover the most amount of money to mitigate what's lost. In this situation, you want to make sure to do it quickly. You want to do it quietly. You want to clear your warehouse space. You want to bring in capital. These companies are sitting on a lot of challenges. Like, when we talk about seasonal, you mentioned, what if there's, this season, like it didn't get cold for the winter until, sometimes like, maybe this winter it did, but the winter before, maybe it wasn't cold until January. What does that mean for ski jacket sales?
Right.
Like it's something where people don't know how numbers could really be affected, or the way that people might order, in COVID in 2020, people actually had record years, and 2021 was even better and crazier because interest rates seemed to be lower. People were at home more or working from home. There seemed to be disposable income. People weren't traveling. All of a sudden, so people are like, wow, back to back record years during, what's happening now, like 2022, let's go all in. So the companies that went all in, and all of a sudden in 22, people stopped buying, and they stopped buying, especially, to that degree, but people started going, back to work more. The economy started becoming more difficult. Grocery prices over the years, the gas prices and everything changed. A lot of companies from that are sitting on warehouses full of inventory because they thought, oh, you have to forecast in real time. And they thought that, oh, the last 2 years were record years. Let's be ready. Also, they were dealing with supply chain issues. So it was way more expensive to get containers in, but they didn't know that, so they're ordering and they're ordering and ordering. But then also warehouse costs are up in North America. So your cost to sit on it here, and then, your capitals cover, so there's so many challenges that we saw it sinking companies. Like companies went bankrupt because of this. And, it's something that, that you have to be kind of on top of it, whatever's happening in the economy, whether it be, recessions and whether it be COVID and more recently tariffs.
Yeah, let's bring that to the here and now. You mentioned tariffs, but there's a lot. You mentioned gas prices as well, but in the context of, I think, a different era. Now we have both of those in the headlines again, among other things. What are you seeing on the front lines? And then we'll go into kind of what you're seeing or what you think is going to come down the road, given your, again, unique perspective.
For sure. Yeah, I mean, in terms of, tariffs alone, obviously it's been a challenge. It's been a challenge to get product into the US. It's been challenge for US citizens paying more for products. And, that in itself is affecting businesses overnight. If you're doing a lot of business in the US and overnight your margins are gone because of a tariff, it makes it difficult to continue to do that business. There's companies that can't get their product into Canada anymore because of tariff wars between Canada and the U.S. So that for sure, we're seeing it, but I think from a, like, more of a consumer perspective,
Sorry,
yeah,
what
yeah,
does that mean when you say you're seeing it? Are you saying that you're just talking broadly high level economic impact, or are you saying you're seeing it even from your company's perspective? You're seeing, like, I don't know, more inventory management opportunities. I'm just wondering if bad
yeah.
news
Sorry,
could be
no.
good news for you. I don't know.
Well, I mean, it's for us. We're busy. We're very busy. We're always busy. We're probably busier than we've ever been. There might be more, inventory type opportunities, but I think because of this, all it's doing is raising prices for consumers. It's making it more difficult to get the products that you want that are not made in America at a reasonable price. Because if I sell to America and I have a 25% margin, and there's a 25% tariff to get my product in, so I lose my margin overnight, chances are if I'm going to continue to sell, I'm going to have to raise my prices in order to be profitable or stay in business for that matter. And that's going to be passed on to who? Some of it's passed on to the retailer, some of it's passed on to the consumer, but the consumer is struggling. So if you're going to go buy a product and you want to go buy a barbecue for, you know, $9.99, it's $1,000, and now it's $12.99 because there was an extra step. You just might not sell as many barbecues because not everyone, realizes or can, kind of handle that. So I think the tariffs are definitely being affected, but that is just one of many things that are really, in my opinion, affecting the consumer right now, because I think the consumer is having a tough time with inflation. They're going more towards discount retailers. They're
Mm.
not going to your typical retail environment and wanting to pay full pop because they can't. If grocery prices go up, 9% or 11%, and you get a 3% raise, and gas prices are up, and people have to find ways. So there's a way to get it for cheaper because there's so much on the market from, excess inventory returns, used, open box products. So I'm finding the customers are being more savvy to say, look, I can't afford this, but maybe I can if I can get it at this price.
That's what's happening here now. What do you think? Where does this kind of directionally end up in your mind 12 months from now? If you were a betting person and you saw,
Yeah.
you wanted to see, like, what is this going to do to the retail environment from your company's perspective?
Yeah, so for me and for a while now, there has been a fundamental change in retail. And I think that a lot of those retail only focused and mall brands have really struggled, and a lot of them haven't adapted. Recently, even Eddie Bauer is a great example where they had to shut down 200 stores, and it's not that Eddie Bauer doesn't make great products or they're not a relevant brand. They're not really as relevant anymore. Obviously, they were big in the 90s and maybe the early 2000s, but that model isn't as working as much because people aren't going to retailers. People aren't going to malls. Especially the younger demographic isn't going to a store, like an Eddie Bauer. And it's it's just a very difficult where as a brand, you need to be able to adapt. You need to be able to get the customer to purchase online on your website. You need to get the customer to purchase online on your TikTok account, through your social media. Like, that's what the world is coming to. Like I said this recently, how, when Facebook was big and came out, people weren't going to the company's website anymore. They were going to facebook.com/company, whoever that was, Eddie Bauer, because people were on Facebook more. And the same thing now. It's, kids and adults and people of all ages are on, say, Instagram and TikTok. So that's the best way to sell them product where they already are.
But what you're saying is you're going to see the momentum that's in place today around price sensitivity and the changes in consumerism towards, fewer luxury goods, more discount based goods is going to continue. That momentum is going to continue.
Well, I think so. And also you're dealing with a model that hasn't changed. So you have these large locations where the cost of rent for these retail locations is up, the cost of minimum wage is up, the cost of, to produce is up, but the traffic is down. So how does that make sense? That's the struggle to me, that if you're not adapting and you're not changing, it's not sustainable long term to have your sales go down and your rent go up and your costs go up. At a certain point, it just, especially for a lot of the underperforming stores, that's why you look at these situations where they might say, like, we're getting rid of Beyond the Rack, we're getting rid of, this many off Fifth Avenues, or we're getting rid of all these underperforming locations, because there's no point in having locations that are losing and continuing to just operate the same way.
Well, Alex, really appreciate your views, sharing your views with us today. Again, not a sector of the retail ecosystem, consumerism, that most people think about, but it's a very important one. And really appreciate you sharing your story, your company's business model with us a little bit here today. It's been very instructive. So thank you, and best of luck to you.
Yeah, I appreciate it. Thank you so much for having me, Will.
Thanks, and thanks, listeners. We'll talk to you soon.